Hi traders, it's Chris. Hope you're having a wonderful new year. Happy New Year to everyone, and a very warm welcome to everyone new in the VIP room. Hopefully you're going to enjoy the analysis every day. I'll give you the updates every day. I'll give you the signals every day so that you can enjoy the profits. And if you're new to trading, then don't be too overwhelmed with it. Just enjoy the updates and the analysis and get used to it before you dive in deep into the markets. I've been trading for 30 years. And I'll be giving you some knowledge that I've learned over the 30 years and my experience. So before I get started, this is the gold on steroid settings, which can be used on any asset, by the way. You can use it on the Dow Jones, on the US yen, any kind of currency, Bitcoin, etc. So I'm going to go over that. In particular, what I want to talk about is day trading, because some of you are day traders, some of you are position traders, some of you are swing traders. So today we're specifically talking about day trading. Now, day trading is where you get into a position and you usually close it by the end of the day. That's a day trade. Now, you can leave it over the night if you wish. That's your prerogative. The other thing you can do with day trading and the same settings is you can become a successful scalper as well. So you can grab 20, 30 pips each time. So I'm going to go over that. Before I do, I'm going to turn off the Pine script for now and then come back in and do the basic settings so you can all enjoy day trading without the complex settings. So we're going back 30 plus years now. When I first started, I was a trend trader, still am to many aspects. I trend trade, which is the most profitable way to trade. Knowing where the trend is really important. So this is day trading setup. We're going to go through the settings for you. I have the 20, which is the blue line. Actually, let's enlarge those for you. So let's make that a little bit bigger. Make that a little bit bigger. Choose whatever colors you want. And the blue line, make that a little bit bigger so you can see them a bit easier. So we have the 20 was the blue line, the 50 moving average, and the 200. Once they're stacking on top of each other, then we can call that an uptrend, can't we? And vice versa if it's a downtrend. So that's the first thing. Before you set up in the morning, you want to find out if there is a trend going on and which direction. The other thing that is useful is the pivots. Just go into indicators and look up pivot. Very basic, but nonetheless highly successful. Just go to standard pivot points. Put that on. That's what will come up on a 15-minute chart. This is. So just double click on the pivots. I'm going to make some adjustments just so they're easier to see. So the most important point is the central pivot, which is the average price of the previous 24 hours. So I want to make that bigger. So I want to make that, let's say, line width 4. But I want to make that different color as well so I can immediately see it in the morning. I work pre-London Open 6 a.m. to find out what's going on. And then you have these targets. You can leave all the targets on if you want to, quite normal. But the most important is S1, S2 and S3 really. So it's up to you. And this plots the targets for you in advance. So we can say that the 20 is moving above the 50, above the 200. That's nice and easy. And we can see that the price, which is essential, is what we call achieving a stepping stone effect. So in other words, you can see that the central pivot now is not moving down. The central pivot is not moving down as previous. It's now achieving a higher stepping stone. So you've got a higher position here. And as long as that continues, then we can expect the price to go much higher. Now, as we come into the analysis in the morning, we can say, yes, tick that box. The central pivot is below the price, and therefore the price is going up. Yes, the price is achieving higher highs and higher lows above the 20, above the 50, and above the 200. And that's what you're looking to do. So once you wake up, if it's achieved R1, resistance 1, and broken it, you can pretty much 90% have a great chance of actually hitting the R2, which is 26.39 as your target. So if you, for instance, come in at 26.28, then you can get out 26.38, let's say, and grab 100 pips, which is pretty good. The other thing you can do, of course, is if you come in later than that, you can buy above the R2. Once the price has broken R2, then it becomes support. So the price comes back down into it, and then it moves up, and then your target is 26.52. Now, as the price moves up and up and up, it becomes more vulnerable. So just be aware of that. So if you're going to get in late at the party, then of course at some stage it may well give way. So the earlier you get into the move, the better, and more chance you're going to have success. Now this is a useful tool. Let me line this up for you. So we have a buy, this says bull and goes green. We don't have the pine script on there, which is useful because it gives us the level of indications. Let me just put that on. So when everything is green, then we can say that the price is going up. When everything is red, then we can say the price is going down. Okay, fairly basic and straightforward. We like to keep things as simple as possible here at the Trading Mentors. And so let's go over this. So now we can see a completely different kind of story here, because we have levels of signals, which is a game changer, to be honest with you, completely. So this is measuring volatility within the market. So you can see these numbers appear automatically on your chart, and they come in 1, 2 and 3. The 1 really is very faint, and you don't want to be trading that particularly. Level 3 signals are very high volatility and high volumes coming into the market. So if you see a buy signal here with a level 3 signal, then the price is going much, much higher. So we have a signal. Let's draw some vertical lines. So there's one there, there's one there, there's one there. Okay, so let's go through this. So first of all, quite often during the first initial phase of the move, you're going to get a number 2. Now number 2 is perfectly acceptable. You can wait for the number 3 to appear if you wish from the pine script, but often the 3 is great. It's going to make money, but then you have to have a much wider stop from the initial. I'll cover the stops and targets in a minute. So we have another buy signal here. The bulls are coming into the market on a level 2, perfectly acceptable, and then another 2. So you had 1, 2, 3 chances of getting into the position. If you've missed 1, 2, 3, don't get in, because you've missed the move, if that makes any sense. If you missed the 1, that's fine. You can get in on 2. Number 3 is a bit iffy, technical term. But getting the earliest possible time is the better option, and then if you get a number 3, then of course it's even better. Now, how do you manage it in terms of stop? Well, quite straightforward. Get your long position depending where you get in on this. If you're at the chart at this point here, the rules from a day trading perspective are not quite there, are they? The moving averages aren't quite stacked up. Moving averages are lagging, don't forget. Everything else is leading. So you want to make sure you have the stop at the previous swing low. This support line on the green is perfectly acceptable. And then you want to go for, especially if it's early move, you can go for 3 to 1. If it's the early part of the move. So that would have been a highly successful trade there. Let's go to the number 2 trade. So as you can see, the breakout here, don't be put off by the targets being hit. So that in this instance here on the first one, you can see that your target here would have been hit, giving you a nice position there. But now we're talking about the target number R2, aren't we? So we can go long here, somewhere around there. Now your stop is going to be below the previous swing low. So somewhere around there, see the white line, which is the 50 moving average. So anywhere just below that area is fine, and you can go 2 to 1. Now, as you get closer and you want to trade this one as an example, you know you've missed 2 maybe. So you might want to get in a little bit late, but it's okay. But you might want to lower your lot position and say get in about there. Your swing low is there. Notice how wide the stop is now, interestingly. So you're talking about 90 pips instead of 50 or 60. So be aware of that and lower your lot size accordingly, especially when you're coming in late. So in this instance, what you might want to do is just go 1.5 to 1 because it's later in the move if you like it. So a fantastic way, very simple setup. It's always beneficial to have the Pine script code and the GOS, the gold on steroid settings, the full-blown charts, because it just gives you a lot more information and is highly accurate as well. And we can talk about swing low, swing trading, position trading on the 4 hour. We'll come to that in the next, coming into next week when we come back on the 6th. And then we wait for volume to come back into the market, of course, which might not happen for a few days, but we'll have to wait and see. But you can see how accurate these are here, in particular on a pullback. So we have a change of character here. So that's the 1. The 2 is the pullback here. So that's the number 2. And then the number 3 is the move upwards. Quite a common thing. Another pullback here, everything's going red, see that? And of course then you have your buy here. Then you get another pullback, and then you have another buy here, and onward it goes. So there's lots of opportunity throughout the day if you're a day trader. It doesn't matter if you're not in it on the London Open. If you work on the New York Open, it's just as successful. But understanding where the targets are will help you. More importantly, understanding where the price is in terms of trend, and also in terms of support as well. The central pivot is the key. The other thing that's interesting about this is the 0 line on this particular tool here. Notice the orange line is a 0 line. When you get a buy signal above the 0 line, that's very, very strong. So bear that in mind. If you get a signal below the 0 line, then that is very, very strong. Okay, so here, below the 0 line, and once the price comes above the 0 line, then you're only really looking for buys. You're not looking for sells. Don't go against the trend, even if you feel like you want to.